good day and welcome to the Q2 and H1FY26 earnings conference call of Axiscades Technologies Limited hosted by MUFG in time. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on the touchtone phone. I now hand the conference over to Mr. Sumit Khaitan from MUFG in time. Thank you and over to you.
Good afternoon, everyone. I welcome you all to the earnings conference call to discuss Q2 and H1FY26 results of Axiscades Technologies Limited. To discuss the result, we have from the management Dr. Sampath Ravi Narayanan, Founder, Chairman and Managing Director, Mr. Shashidhar S.K., Chief Financial Officer, along with the senior management team of Axiscades Technologies. They will take you through the results and the business performance, after which we will proceed for Q&A session. Before we proceed with the call, I would like to mention that some of the statements made in the today's call may be forward-looking in nature and may involve risks and uncertainties. For more details, kindly refer to the investor presentation and other filings that can be found on the company's website. With this, I now hand over the call to our chairman, Dr. S.R.N. Sir. Thank you and over to you, sir.
Thank you. Dear shareholders, welcome to the earnings call of Q2 H1 FY26. It has been 3 quarters since I had the privilege of resuming my role as chairman of your esteemed company. As you are all aware of, during this period, I have launched our Power 930 initiative, setting an ambitious revenue target of 9,000 crores by 2030. To achieve this vision, we have taken up the following initiatives. We are aiming for a robust year-on-year growth of 40% in our core business areas for FY26 and FY27, with further acceleration of over 70% growth projected for FY28, FY29 and FY30, once our infrastructure is fully in place. I am glad to inform you that we are on track to achieve about 45% growth in our core domains this financial year, FY26, and same 45% growth in our overall EBITDA. We have forecast visibility to achieve similar numbers for FY2027. Also, we are building a pipeline and silo to replenish the pipeline that can help us to achieve 70% of the growth, 70% growth for FY28, 29 and 30. We are focusing on non-linear growth, moving from services to solutions. For this year, FY26, we have set a goal of improving per capita EBITDA by 30%, and we are glad to inform that we are on track in H1 to achieve this. As informed to you in every earnings call last 2 occasions, we are investing in various world-class infrastructure and facilities. First, our Devanahalli Aeroland facility of about 165,000 square feet for electronics, semiconductors, artificial intelligence and test systems is now ready, and a portion of this is already operational. Work has started in ambitious 3 million square feet Devanahalli Atmanirbhar complex, which once completed will be among India's best private sector for radar, unmanned warfare and offset fulfillment facility. To grow at this pace, we set ourselves and cater to the growing demand for proven cutting-edge solutions. We need to forge strategic alliances with global majors and technology leaders. We have signed with various foreign OEMs and technology leaders over the last 2 quarters, which you are well informed about this. We are proactively reviewing our business portfolio and strategizing on areas that show stagnation, negative growth, or limited intrinsic value. To ensure that we remain focused and agile, we have engaged a strategic advisor and are making consistent progress in sharpening our business priorities, the result of which will be known by the end of this quarter or Q4. We assure you that we are firmly on track to deliver long-term, sustainable, accelerated growth that gives all of you the best value on your investment. I wish to express my sincere gratitude for your ongoing trust and support as we undertake this transformative journey together. I am confident that together we will build a future defined by enduring growth, operational excellence, and lasting success. Thank you.
Thank you, Dr. SRN. This is Shashidhar here. I'm the Group CFO of Axiscades Technologies Limited. And I thank you for joining us today for the Q2 and H1 FY26 earnings call. And I appreciate your continued trust and engagement as we share our progress and outlook. We are pleased to report that Axiscades has delivered another quarter of robust growth and operational excellence. For Q2 FY26, our consolidated revenue is at 299 crores, marking a 13% year-on-year increase and a strong 22.7% sequential growth. EBITDA for the quarter is at an all-time high of 47 crores, up 41.5% year-on-year, with EBITDA margins expanding to 15.7%. Profit after tax stood at 23 crores, reflecting an 89% year-on-year increase. For the first half of FY26, revenue grew to 543 crores, up 11.2% year-on-year. EBITDA for H1 was at 81 crores, a 25.7% increase, with margins improving to 14.9%. PAT for H1 is at 44 crores, up 51.6% over last year. These results underscore the strength of our core domains, which is aerospace, defense, and ESI, which contributed to 75% of H1 revenues and delivered EBITDA margins of 19%. The company continues to recalibrate its other verticals to make the margin accretive. The non-annualized diluted EPS for H1 FY26 stood at rupees 10.21, a 53% increase over previous year. Our transformation journey continues in right earnest. The Power 930 initiative led by our chairman is guiding our ambition to reach $1 billion revenue by 2030. We are targeting, as what Dr. SRN explained, over 40% annual growth in our core businesses for FY26 and FY27, with further acceleration as new facilities become operational. Our shift from a service-centric to solutions and product-driven model is already visible in our improved revenue mix and margin expansion. The significant investments which Dr. SRN explained will be funded through internal accruals, strategic investments by our partners, and some amount of bridge funding by the banks. With a consolidated net worth of 700 crores and a net debt of around 50 crores, the company is in a comfortable position to sustain debt for the said expansion. Our operational discipline and portfolio optimization are driving sustainable profitability. Defense revenues grew by 37% year-on-year in Q2 and 31% in H1. Aerospace revenues grew by 16% in Q2 and 12% in H1. And ASI continues to scale with new engagements in the semiconductor and AI-driven solutions. We have secured major wins in DRDO, DPSU, and global OEM projects, and our order book provides strong visibility for the second half of the year. Looking ahead, we remain confident in achieving our FY26 guidance, both in terms of revenue and profitability, supported by a robust order book, strategic alliances, and continued focus on operational excellence. Our leadership team is committed to delivering long-term value for all stakeholders as we advance towards our Power 930 vision. Thank you, and we now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Bala Subramanian from Aryan Capital. Please go ahead.
Good afternoon, sir. Thank you so much for the opportunity. Congratulations for good set of numbers. So my first question is, we have signing a lot of MOUs, and what kind of opportunities and when we can expect materialistic order inflows from those MOUs, and what kind of order visibility is linked to global partnerships like MBDA, Intra, and EEA? This is my first question, sir.
Babu, can you take the call? Yeah. Yes, sir. Yes, I'm Shadi Babu, Head of Defense here. We are signed up with MBDA is, we already have a decade-old relationship. We are expanding our relationship in the missiles.
So we are on both ground systems, and also we are proposing to manufacture the missiles in India. And we also have a relationship with Indra, which is already materialized, and we are a center of excellence for production of certain systems, including antennas, and also in future we'll be taking up radars and active protection systems. And we also expanded our counter-drone product portfolio with a relationship with a French company for hard kill options. So all this, including also the drone, we are introducing specialized drones in the Indian market. So all these relationships are going to really pave a very strong revenue growth in the coming year.
Okay, sir. Sir, my second question for this, our new facilities in Ireland and DAC, how much funding is coming from strategic partners for these new facilities?
Does she want to take or?
Yeah, so essentially we are still in discussion with our strategic partners. By strategic partners, we mean the major OEM customers we are talking to, and that is still in the works, and at this juncture, we are unable to commit a particular number on this particular initiative.
Okay, sir. Sir, I think we are qualifying into critical subsystems for BrahMos and Kusha. What is the estimated total addressable market over the next 5 to 7 years for the components you are supplying? Example, TPF, exciter receiver, onboard computer, seekers, and what kind of anticipated peak annual revenue contributions expected from these projects from FY27 onwards?
Let me answer. Basically, we know the numbers. For example, BrahMos will be 150 systems a year. Kusha is going to be nearly 1996, 476 into 4. So we are looking at capturing at least 10 to 15% in a missile by providing various subsystems over the next 5 years. We cannot get into details at this stage, but that is our target and goal. We are pretty much on track for it.
So my next question, the defense payment cycle nearly 120 days, given expected ramp-up in that revenue, additional working capital may be needed from FY27 onwards. What's the maximum required incremental working capital for FY26 and FY27, and what is the strategy to fund this requirement without increasing interest cost? I think our finance cost is nearly 8 to 9.5 kind of range. To get some clarity on that.
Yes, when the I would say our defense revenues increase, there will be a requirement for incremental working capital. But the fact of the matter is that we should be able to fund it. Our working capital utilization is not to the extent of I would say what has been sanctioned. So we should be able to fund the additional working capital from our internal accruals and cash generation.
Okay. So my last question on the non-core segment side, I think it is not doing good. What is the time-bound plan, maybe next 2 or 3 quarters for either divestments or restructuring of these assets? What is the expected one-time financial impact versus the ongoing margin acquisitions from this exclusion?
So essentially, as Dr. SRN explained, we are trying to recalibrate these verticals, and it's already showing, good progress in terms of the positive margins which are accruing in these 3 verticals. And at the moment, what's the next question? Second question?
So, whether we are planning to, planning for a divestments or restructuring of these assets?
So that plan is on the table. That plan is on the table, but it is still, I would say we are still some way away in terms of, I would say, divulging the details.
Sorry to interrupt you, Mr. Bala Subramanian. May we request you to please?
Thank you. Yeah, thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, sir, you are. Please go ahead.
Okay. So just first up on ESOP cost. So any ESOP cost that we have incurred in this quarter?
Yes, we have incurred an ESOP cost in this quarter. It's not a very significant amount. It's a small amount of around 2.5 crores or so.
2.5 crores. And entire year, what sort of ESOP cost we are looking at for this year and next year?
You see, we are planning for some additional grants during the course of the financial year, and we expect that it would not be more than 15 to 20 crores for the year.
For this year, 15 to 20 crores.
Yeah.
Okay, understood. And on this, the big expansion that we are planning, so what's the total capex that we are incurring in there?
The expansion is in various phases, and what is planned for the current financial year is the phase 1 would be about 150 to 180 crores. And over the next 3 years for the DAC land, the aerospace and defense cluster, the plan is to invest close to about 1,100 to 1,200 crores.
1,100 to 1,200.
Yeah.
Next 3 years. And this phase 1, this 150 to 180 crores will be incurred in FY26 itself?
Yeah, there will be a spillover to FY27 also, but the total planned capex for the current financial year is around 150 odd crores.
Okay, understood. And so how should one look at your debt profile?
Our gross debt currently is around 163 odd crores, and of course the net debt is just around 50 odd crores. So we are looking at some kind of a bridge finance pending the strategic investments which I talked about, and so that would be this financial year would not be more than 50 odd crores.
No, so by FY26 end, you would have additional 50 crores. That's it.
That's right. Yeah, that's what is being.
What about the next year by FY27, where you see your debt levels?
That's where we are looking at. As I said, the one plan is to divest some of our non-yielding, non-profitable assets, which will generate sufficient cash. Plus, of course, the internal accruals and the cash generation from the operation, and of course the strategic investments we are talking about. That would kind of get clarity by the I would say by the end of the current financial year.
Okay. But is there any, bifurcation? Whatever, let's say, working capital plus your this capex, so 1,100 crores plus your working capital. So maximum how much debt beyond which you will not go? So some sense on that would be very helpful.
See, we don't want to go for debt unless if at all we go, it will be a bridge basis. We have means to fund this. At this stage, I'm not able to share. Definitely, one is what Sachi, our CFO, mentioned, that certain non-strategic, assets with no intrinsic value, by divesting them, that is one definite possibility, and it's a near option. And the other one is bringing funds from the strategic investors. We have good interest in that from various foreign OEMs and other people who have interest in similar things. We have. But what we want to do is currently create that, because it's a very new concept, brand new concept in India and in the defense aerospace world. So we are trying to create a model, a scalable model, which is 150 crores. The phase 1 will create a scalable model so that people can see and believe. Then we want to take that investment. So probably we'll do it in the Q1 of next year. Until then, we'll spend. We want to minimize any debts or keep it as low as possible. Even if you do, it will be a bridge fund, not more than that.
Sorry to interrupt you, Mr. Poddar. May we request you to please rejoin the queue? We have participants waiting.
Yeah, that's it.
Thank you. The next question is from the line of Kaushik Mohan from Ashika Group. Please go ahead.
Congrats, sir, for the good set of numbers. So I just wanted to understand on the taxes part, on the bookkeeping side, and also on the funding side. So if we are going for the disinvestment of the non-performing core assets, so what kind of value that will be unlocked over there, and how the investments will look into the current businesses that we have?
You see, this is Kaushik. This is still on the drawing table at this juncture. We don't want to talk about specific numbers in terms of how much cash we are going to generate out of this. So we want to park it for the time being.
Okay. And sir, on the taxation part?
You see, your question is why the tax rate is higher, is what you're trying to
Yes, tax rate is higher. Why is the tax rate higher?
Essentially because of the fact that one of our entities, which, as you know, ADD Solutions is recording, a loss, as a result of which the PAT kind of gets drawn down, and it, and it gives a feeling that the tax rate is higher. But the average tax rate which we can expect over the entire year should be not more than 25-26%.
Got it. Sir, and currently we have a revenue of, in the H1 is 543 crores, and in the run rate it looks like 1,100 crores. So can we expect these numbers to be on the clear path, like 1,100 to 1,200 on the top line?
Yeah. So as Dr. SRL explained in his introductory remarks, we are looking at a 40% plus kind of a growth in our core verticals, which will take you to the number as what we just now mentioned.
Perfect, sir. Perfect. I'll get back in the queue. Thanks for that.
Thank you. The next question is from the line of Pankaj Parakh from Molecule Ventures. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. So my first question is on our EASI segment. So for this quarter, the numbers look pretty slowed down in ESI segment. So just would like to know how would be the trajectory for the next 2 quarters and how it would be aligned to our 40% growth kind of target. And my second question is on our hyperscalers that we have 2 partners, hyperscalers, and how was the business going with them and what is the revenue potential for the H2 and next financial year from hyperscalers? That's it.
So I'll answer this question. Yes, there is a slowdown on ESI because now we are firmly moving into manufacturing based. So we are setting up the EMS facility. The way we have to grow is only because until now we are doing only the design and giving to third parties to manufacture. We are not involved in manufacturing. Now we are in the process of taking the whole box build. So our Yarrow facility will cater to that. So it will take little more time. After installing the facility is almost ready, the equipment will come in a month's time. After that, these 2 hyperscalers will come. We are setting one world-class acoustic lab for one hyperscaler and a world-class flex board facility for another one. So both will be ready by almost like it will take up to March, not only to get ready, to get certified. They have introduced their existing partners for that, and we have to pay them. So the process is going on. So there is a little bit of slow. I don't expect any improvement in the Q3 and Q4 on ESI. There will be the similar growth, but which will be made up for other segments because we want to be firmly on track. As far as your projection on is concerned, the hyperscaler 1 will have an exponential growth next year. So this year we are doing $2 million with them. Next year it will be around maybe 6 or 7 million next year, hopefully, if the facility is ready. The other hyperscaler, we are doing about nearly $500,000 to $1 million. So that will double, perhaps, because that will go slightly slower than that. But overall, it looks pretty good next year. But currently we'll have a growth, but not in the same pace as defense and aero. Okay.
Understood, sir. And my next question is on the CAPEX side. So as you just mentioned, there is 150 crores plan for the phase 1, I guess that is for the Bangalore facility. And phase 2 will be entirely 1,200 crores for the another facility. So combining, what would be the revenue potential looking for the company, I mean, to the full capacity utilization? And just on clarity that we are trying to equity side fundraising for the CAPEX or not? That's it.
Sir, we are, I'll just give a breakup. We have 3 facilities coming up, though one facility I'm not talking about Hyderabad because it is not in the Q2, up to Q2 because it was sanctioned day before yesterday. So we are also building a missile Atmanirbhar complex in Hyderabad, very prestigious missile facility. And that will also be parallelly taken up. That will incur some additional funds. So overall, it will take about 3 years. And this phase 1, after that there is a phase 2 and there is a phase 3. So it will be done in 3 phases. First phase will be about 150 crores and second phase will be about 450 and the remaining will be done the third phase. And the overall fund, let us assume it is about 1500 crores spread over 3 years, including Hyderabad. We have not mentioned it because it has happened in this Q3. And so overall, as to answer, we are planning to grow at 45% this year and next year, which will take us to a revenue of something like somewhere. And from there, all the growth should be supported only by the facilities. So that means if you have to reach about $1 billion, 9,000 crores, the delta revenue, whatever the additional revenue, should only come from this, which you can do your math. If from current level we have to reach current level plus 45%, and then whatever growth, 70 should come only from that. That is the estimate, and this should pay back in those years.
Understood, sir. Is there any equity fundraising plan as of now?
Nothing at the moment. As I said, the strategic investment which we are talking about, once it gets clear, we need to decide on the entity into which the capital will come, which most probably will be the SPV which holds the land as far as Bangalore is concerned. So in the mine listed entity, there is no plan for any equity dilution.
Sorry to interrupt. May we request Mr. Thank you. The next question is from the line of Jatin Jadhav from Sahara Capital Private Limited. Please go ahead.
Yes, sir. This is Jeevan Bhatwa from Sahara Capital. Congratulations, sir, for a great set of numbers. Only one question. The timeline of this missile complex in Hyderabad and this Devanalli Atmanirbhar complex. So are we on track for the timelines?
Yeah, Mr. Jeevan Bhatwa, so thank you. Yes, Devanalli Atmanirbhar complex, we did the groundbreaking ceremony. We are supposed to complete the first phase by September of next year. We are on track. That first phase will consist of radar manufacturing, assembly, and support system, and also antenna manufacturing. This will most likely cater to the Indian defense as well as companies like Indra. So that is our focus, and we already have orders for that, and as well as facility will be fully ready. We are hoping. The phase 1A, the next phase will be aerospace, complete aerospace field shops and aerospace related facilities, supply chain management. It is starting on November 26th. That should be ready by somewhere around next year, December. So that will also be mostly on track. For missile facility in Hyderabad, it is going to be backed by very good orders, we hope. Okay. And we are already discussing, and that is the reason we have went ahead and in Hyderabad, and we will have a strategic partnership, definitely. Okay. And so we start the work and probably complete. We are starting it immediately. Probably complete by March. That will be our third priority. It will get completed by March 2027. That's the plan. Okay.
Perfect, sir. Thanks a lot.
Okay, thanks.
Thank you. The next question is from the line of Vijay Sarthi from Shubhkam Ventures. Please go ahead.
Thank you for the opportunity, sir. Congratulations to you and your team for a wonderful quarter. I just had one question. So there was a recent announcement about the MOU with SEALAS to do counter unmanned aerial systems. Typically, that will get mounted to UAS, but has some amount of integration to your existing products. So qualitatively or quantitatively, could you help us understand what is the opportunity size and how this technology fares well against the existing technology that today we have, sir? Thank you.
Thank you, Mr. Sarthi. See, SEALAS is some of the very innovative hard kill, laser kill, which is by far the most superior product, which is tested in Ukraine war and NATO and other things. We were privileged to receive the technology and support and part of the whole thing, and we are designing the whole system to be integrated with Indian Armed Forces for handling the hard kill. there is no proper hard kill option available at this stage. We are doing jamming and soft kills so far. Hard kill using laser and energy weapons has never been not in a big way in India. So this would be very much needed. There is a lot of interest, lot of requirements, lot of excitement about this.
Okay. From education purpose, sir, so there are other companies that are also involved in hard kills today. They've also been showcasing and testing this. How different is ours going to be in terms of?
So I think we should separately discuss the technology and.
Okay, sure. And the other question is, on the defense, we had a very good performance also, apart from other segments, at 22% already. Now we are yet to get the new capacity coming on board and, really have the leverage. So do we expect defense business margins to, say, move to 25% in the next 2 years? Can you hear us? Yes, sir, I can hear you. Can you hear us? Hello?
Yeah. See, the hard kill options, the other companies, there are various hard kill options, but there are very few companies working on the laser-based hard kill option, and we are in the forefront of, leading this, technology and also integrating this system. So ours is already a proven system with the RF sensing and RF, RF kill options. So adding this along with some more active sensors and also this hard kill option, it is going to be quite a formidable product. And we are sure compared to the competition, we are well ahead.
In terms of range and energy produced, which is much superior range, it can and the range and the whole energy produced, then the weight. These are the major criteria. Payload. So this is far superior, probably the best product in the world. No match. That even government knows it very well. So I don't want to divulge into details. I'll be very happy to explain and present to you when you can meet us in person. Okay.
Sure. Okay, sir. And one more question, sir, on the defense segment. We had 22% margins today, and we are yet to really get the new facility and, really rev up our operations. Given that, do we expect the current 22% to scale up to 25, 26 odd % in the next 3 years, or probably when we reach the 9,000 crore mark? Is it right to look at it that way with respect to defense margin? Thank you.
Can you just explain again? I lost you. Can you just
No, our defense margin in this quarter was 22%, and it is only a start for us.
No, it will remain the same. No, it will remain the same. I don't think that margins of defense can improve. I don't believe anywhere, because defense is getting very competitive. There is a lot of competition. Most of them go on bids, and there is no way, I think, with Indian defense we can increase the margin. Only way we can do this is OEM. OEM engagement can increase our margin. As you know that we are working with three-pronged approach, and OEM there is a margin possibility. But I would not commit to anything more than 22%. 22% is pretty high as far as I'm concerned in defense. My 40 years of my experience, it's pretty high average, and I would like to, I'll be lucky to maintain that for next 4 years. Okay?
Sure, sir. Right. Sure. Okay. Sure, sir. Thanks a lot. All the best, sir. Thank you.
Thank you. The next question is from the line of Nirvana Laha from Badrinath Holdings. Please go ahead.
Hi, thanks for the opportunity, sir. Sir, a few questions about your existing program. So first, on the emergency procurement, sir, is there any visibility of the quantity and POs of drones, counter drones, or BrahMos missiles? Anything you can comment on?
Yes, on the emergency procurement, we were the first organization to receive the orders on the man-portable counter drone systems. So we already actually received the order, and then we are actually working on delivery of that. And there are also more trials going on. So we expect to receive further orders. And also, it includes both man-portable and handheld versions of our counter-drone system. We have got the orders.
Okay. Sir, any comment on possible numbers that you're expecting here?
No numbers I'll not be able to disclose, but there are many trials going on, so we are very confident of having more success.
Okay. Our idea is to be one of the three players, top three players in this, because the market seems to be very good. There are also many players now come up, so we want to be among the top three consistently, especially on man-portable, vehicle-mounted, and then handheld. In this segment, we want to have a leadership. Technically, we are very strong. In the market segment, our idea is to capture about 20 to 30% of this market. And that's what I can say at this stage. Okay.
Okay, sir. Great to know that. Sir, next question is on BrahMos Seeker. Sir, where are we in the process of winning the orders, and like when can we expect orders here? Where are we on that?
Sir, just give a little bit technical outlook to you. BrahMos had a seeker from Russian Aga. The government is looking for indigenous seeker, and then the seeker is based on gimbal, slightly old technology, which is can be easily identified by enemies. Okay. Now, so already two companies are supplying that. The government is meanwhile trying to look at new type, ESA-based radar. So they asked another two companies to develop that, which we and one more company are developing it. And we hope that we will have a successful trial before March. If we qualify by March, we'll start getting orders, and from as early as next year. So that will be very good, and we are confident of qualifying. Okay.
Got it. So, sir, what kind of numbers would seekers be in for BrahMos?
I don't want to comment on that. See, there are BrahMos currently 100 numbers, and they are ramping up to 150, and per seeker is cost, what's the value. So it is almost like a cost of 30% of the missile, cost 30 to 40%, at least 30% of the cost of missile. So it is good number. So we are looking at it, and we don't know it will be shared 3 ways, 2 ways, or whatever. Okay, right, sir.
Sure, sir. Last question from my side. Anything on the MBDA test benches? When can we see the supply, and if we will see any supplies from H2 itself?
MBDA test bench. Mr. Babu is an expert.
The MBDA test benches is an ongoing program, so we have expanded, as I mentioned. So we are now, we are delivering more number of test benches. As you know, we want to achieve to about 10 benches per year, which is well on the way right now. We have already started off with the program, and it is continuously expanding, sir.
And here, it's an ongoing activity. We probably will be supplying to the global requirements.
And also we'll be a part of the global supply chain, so we'll be handling all the global requirements from here.
Sure, sir. Right now, how many are we doing? You're saying we scale up to 10. And right now...
by March, we'll complete 3.
By this financial year, we'll be completing 3 benches, and every year, anywhere from 5 to 10 will be delivered.
Okay. All right. Last question, if I may. Any updates on the development and commercialization of PACAN antenna? Anything you can share on that?
We'll give a good news in about 2 weeks' time, sir.
Okay.
Development is completed, approved by the customer. We are expecting the production order. So we'll probably... we'll be able to, if things go well by God's grace, we should be able to tell you by another 2 to 3 weeks, maximum 1 month. Okay. Right, sir.
Great, sir. Great. Thank you so much. All the best, sir.
Thank you. The next question is from the line of Mayur Pakharia from Wealth Managers India Private Limited. Please go ahead.
Good evening, sir. And wish you all the best and the entire team at Axiscades for a phenomenal execution. Sir, I had a couple of questions. One is, in the opening, in the initial answers, you mentioned about about the divestment of the non-core. We understand that, it takes time and it's a segment, it's a business part. But do you think we would be firmly in place by the end of this financial year? It should be done and dusted. Is that a fair outlook to have as far as the timeline is concerned?
Yes, sir. It's a very fair assessment. It's very much on track. It's fair to assume that. We are also expecting that to conclude by this financial year in March.
Okay. Sir, secondly, sir, we have a fair, from the revenue perspective, we have a fair allocation to the US. Any kind of opportunity or challenges in terms of what is going on, do we face currently or is expected? How do we see this situation?
One, sir, we are not people dependent in US. We have 120 people or 140 people in US. Approximately 120 people are in non-core with Caterpillar, and we don't think that is a threat. And out of it, only 34 are in H1. So that's not posing any issue. They are already in existing H1. The others are in American citizens and this thing. And remaining are with E5. E5, the leaders, the hyperscalers want every operation to be shifted to India. They are themselves are diluting the interest in US and bringing every work to India. So we are very safe around.
Right.
With all our anchor customers, Texas Instruments, Qualcomm, and the two hyperscalers and others, most of them are India now. So it's fine.
Right. Sir, finally, pardon me if this question is not very right. It's my lack of understanding, but just to try and understand a little bit more. Sir, globally, every country and even the large developed markets, developed economies are trying to increase their spending on defense, especially from the European side. Across the globe now there is an increased requirement for defense. So we are, from a defense perspective, we are dealing in three strategies. We understand, there is a partnership model, there are DRDOs and the things like that. From a global supply, while our partners will be benefited and they will supply, from our perspective, are there anything in pipeline, or is that understanding right? And what kind of is there opportunity very large enough which we think will come in that 930 plan, or that will be outside of it, or how are we pursuing? Is there something, or will remain from a partnership model? If you can add some clarity on that. Sorry, it's my lack of understanding on that side.
No, sir. For example, take most of the places we are talking is where we will, the OEMs, along with OEM, we have first requirement is to meet the Indian needs. Second is to do some kind of exports. Okay, so it's beyond India. Certain crucial technologies come from them, but this unmanned thing is a great leveler. There is a lot of chance for exports. People are asking for exports because we are all new. We are all on the same page as far as unmanned warfare is concerned. There is a lot of chances of exports, and we are also looking it very seriously to expand. We are discussing, so it's going to work either way. But primary focus, more than 60% will come for Indian-based programs and catering to the offsets and so on. Second level in that OEM engagement is old products, sending it across or as a cost arbitration. The third one is our own exports, our own products getting exports, especially in the unmanned area. I feel by last another 2-3 years from now, we'll be a net exporter. That's what I think. Okay.
Sorry to interrupt, Mr.
Great.
Mayur. May we request you to please reach. Thank you. The next question is from the line of Harshit from Elara Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for good set of numbers. So just wanted to check on the defense side, sir, what are the key areas that you guys are concentrating on? Let's say by next 3 years, which will be your top 3 revenue categories within the defense segment, sir?
As widely informed again and again, we are working on 3 major areas. Number 1 is missiles. We are trying to do end-to-end starting from our focus there on one side, rocket motor and rocket motor filling with all this with completely pyro and that is very propulsion and so on. That is very important for us. Second thing is the seeker. This forms about 50% of the value of the missile, and also the onboard electronics and then and those kind of things. That is missile launcher and launcher systems, and then final assembly. So this is going to be our major focus, and I believe about 40% of revenues of future our defense will come in that. This is the segment which is much required. Being missile being consumable, we feel there is a great deal of demand, and also there is a great deal of demand for exports. So this is an area we are working. This requires a strong electronics presence, including seekers, IR seekers, RF seekers, and onboard computers, and so on, and then strong mechanical engineering. So we are working on it, and our Hyderabad facility is geared up for that, and we are also forcing partnerships in this. This is number one. Number two is radars and antenna, which we already have a very strong, but we have never done a full-scale large radars and maintenance. So that is what we are focusing on. There is a huge requirement for radar integration, maintenance, support, and so on. And incidentally, we are not looking at more at India, but we are looking at foreign OEMs. Because radar is fitted in every major thing like AVAX, fighter aircraft, etc. So we are looking at long-term support for the OEMs and work with them. So our Devanali facility will cater to that. Then Hyderabad facility will cater to the number one item, which is missile. Number two will be catered by our facility. This also I'm looking at around 30 to 35% of our revenue comes from this. Then the other third is unmanned. In the unmanned, we have counter-drone system, and also we are looking at three areas in unmanned. That is counter-drone system, then laser kill, and loitering munitions. These are the three things. That is the kamikaze and so on. We are working on that. There is a lot of synergy between this and the first two, because when we do loitering munitions, it's similar to making a missile. So there is a lot of synergy we can learn from the radars and this about jamming, and everything is interlinked. So we look at the other things. So the fourth one is ground systems, which is very small, which is going to be our test equipments, masks, and whatever we are talking about, like our tank trailers, and we are probably looking at large, that kind of systems. So these are the three segments and the 3.5 segments we are going to work with. So 30, 40%, 30, 40%, the second one, then remaining in the third and fourth, 10% in the ground system. That's hope it answers you.
Yeah, so thanks for giving a longish answer and great in details. But within all the three segments, most of the relations are through partnership, or we are also doing indigenization in all the three categories through our R&D. If you can also share some details on that.
Sir, missile has both. For India, we have to do indigenous. They don't accept the foreign content or foreign this thing. So we will be doing indigenous development. And so we have for Indian own missile like Kusha, BrahMos, we have to do it within India. Whereas foreign-based missiles, like there are many missiles available, so we have to take technology from abroad and do that. So it's both. Similarly for radar, and then third, it's purely indigenous in this thing, where we will be indigenous not up to the last this thing, because we will be taking best of breed solutions around the world and mostly integrate them, write software, etc. in the unmanned system. And some of them will be making. And the ground systems are purely indigenous. So if you look at it, 50-60% will be based on R&D and the indigenous development. 40% will be with the foreign technology, built to print, those kind of things. Okay.
Understood. So thanks for the detailed answer again. And just lastly, sir, you had also shared at your analyst meet, there was a pipeline of close to 12,000 crores of order. One was confirm order, and the other was something that you expect to, probably get into more confirmation order. So there are 6 months past since we last met. How much of the 12,000 crore order which you were expected to get into confirm order has been converted according to you? I hope, sir, I was able to explain my question.
Yeah, I got it. See, it's a part of Power 930 program. So we are always constantly working on 3 levels. One is on the confirmed order, one is on the pipeline, and another is on a silo. So we are currently, our goal is to convert about 60% of pipeline into confirmed and keep replenishing the pipeline. We are always doing that. Currently, what all I can say is we are very comfortable up to FY27, achieve the numbers for FY27 and the mentioned growth rate. We are absolutely comfortable, and we have strong visibility for 28, 29, and 30. We have strong base. I don't want to commit to any numbers at this stage, but you can be rest assured we are on track with the numbers as far as this thing. So we are working towards that with building all these partnerships and all only for that. And we are converting. We have a fair amount of success rate in that, and we are working on that. So we are on track, sir. Okay.
Okay. Thank
Sorry
you.
to interrupt
Again,
you, Mr. Harshit. I request to please rejoin the queue. Thank you. The next question is from the line of Rohan Mehta from Ficom Family Office. Please go ahead.
Hello, sir. Thank you so much for the opportunity. Am I audible?
Yes, you are. Please go ahead.
Perfect. So in the last quarter, the management had indicated that generally the defense execution that typically picks up from the end of Q2 onwards, with the bulk of the execution expected in Q3 and Q4. But we have noticed that Q2 itself has seen a good pickup in execution. So does that mean Q3 and Q4 would be much better as earlier expected? And why would that be the case, sir?
Sir, we have, one is we don't want to put ourselves pressure on Q4, and we have excellent productivity this quarter, we can say. So that is one reason. Also, one of the reasons is we are in the process of shifting to the new facility. So there will be a lot of disturbance, and we feel that Q4 may be affected due to this disturbance. So because of that, we try to force extra time to do work on Q2 and also on Q3. Q3 will also be, I believe, as good as Q2. Q4 will not be bad at all, but Q4 will be a filler quarter rather than the accelerated quarter. We would like to be more relaxed on Q4 so that we want to fulfill our commitment of 45% growth. The delta will be done by Q4. What I would assure is we'll have a 45% growth on the core segments, and the overall EBITDA will be 45% growth will be there. Both will be achieved, but we think we'll want to accelerate more on the slightly more. We are pushing ourselves to foresee the disturbances because it may probably 2 to 3 weeks will be lost when moving from our facilities in the city to Aeroland and so on. So that's what is happening now. Okay, right, sir.
Got it. Thank you for the clarification. And last question.
Sorry to interrupt you, Mr. Rohan. May we request you to please rejoin the queue? Thank you. The next question is from the line of Pujan Shah from Molecule Ventures. Please go ahead.
Hello.
Mr. Pujan Shah, please go ahead with your question. Your line is unmuted.
Yes. Thanks for the opportunity, sir. The first question pertains to the QRSM segment. So right now it is getting a bit delayed, and one of our key manufacturers has been saying that they are confident on receiving orders in March 26. So just wanted to understand your part of view that how much contribution we have been expecting from QRSM segment in FY27, and does we have counted our revenue from QRSM in FY26, or we have already been expecting to get all our revenue material contribution from QRSM in FY27?
Sunil, can you answer if you are listening? Mani or Sunil?
Yes, yes, sir. So QRSM, we are expecting around 7 systems in the next 2 months, but this will not contribute to FY26. It will be for FY27, and the production orders are expected by March.
Okay, sir. Got it.
Yeah.
So no impact on FY26. Okay.
Yes.
Okay. But any quantum, or you can quantify in terms of number, what would be contribution from this program in FY27?
Sir, it's very, very limited, sir. In our total scheme of things, it will be very small. So it is not, even if it is delayed, we have a backup plan. So we have a sufficient buffer for FY27 to meet our revenue and EBITDA goals, sir. Okay.
Sorry to interrupt, Mr. Shah. May we request you to please rejoin the queue, sir?
Thanks.
Thank you. The next question is from the line of Jeevan Patwa from Sahasrar Capital Private Limited. Please go ahead.
Hello.
Yes, sir.
Please go ahead with the question, sir.
Hi, this is Jatin Jadhav. Thank you for the opportunity again. Great set of numbers. So my question was regarding the collaboration we did with the company, the Celia's laser product. So what kind of output can we expect on the target, let's say joules in centimeter cube to its maximum range, if you can share, for the product we are designing with them for the Indian Army?
Sir, we can't get into that. We don't have the current data clearly, but I would be very, very happy to receive you in our office any moment. Please come. We'll give a presentation, and definitely we would like to. I'm very happy if such an intense question came. But we will go through that and what we are building, etc. We will explain to you. And either anyway, so I would definitely be happy to receive you and go through a complete.
Thank you so much, sir, for the invite. The second question was essentially a follow-up to this one only, because there is a company in US who's basically focused on high-power directed energy weapons, and they've developed a system. Epirus Leonidas is the system's name. My question was, why aren't we or India focusing on that? Is it a technology which is not yet battle tested, or as a professional, don't you see any merit in that technology, because we shifted to a laser-based technology for hard kill option?
Yeah, it's a high energy based this thing. Still, the technology is not fully ready, and it is bulky, and the range achieved versus the power that they are using is quite the range is less, whereas the power being used is very high. So these are not matching the end user requirement. So that is the reason why why laser is very important.
And we are typically mounting it agile, and we are mounting it on a small jeep and kind of vehicle, 4x4 vehicles. So we need to be very optimal about the size, and real estate available is less, weight carrying capacity is less, and terrain is very bad. So it is optimized for Indian conditions. For India, I think the most suitable option is laser, and that too, the Celia's kind of solution is the best. Okay.
Got it.
Sorry to interrupt. May we request you to please rejoin the queue? Thank you. The next question is from the line of Rupesh Tatia from Long Equity Partners. Please go ahead.
Yeah, hello sir. Congratulations on fantastic result. I have so many questions. Let's see how many I can do. So first question, sir, is on Mistral. So once this EMS facility comes online, let's say by March 26, can we expect, let's say, $8-10 million of revenue in FY27? And then the second part to the Mistral question is, I think, how is the drone controller business with the US drone leader is going? Can that business also become like a $5 million in 1-2 years?
The answer is yes. Definitely there is a possibility once we have your numbers are fairly what we are also expecting. And first question, yes. And once the facility is ready, we can expect that kind of number. And the second question, there is a little bit of slowness in the way the space is going on the drone controller. It's rather slower, so we may not expect that kind of number. But one thing we are trying to do is integrating with software, etc., and make the value more. So we hope that will happen. But otherwise, overall, it's very good. Prospects are very good. So answer your first question is yes. Second question is no.
Okay. And then the second question, sir, is Shashi, aerospace segment margins compressed, I think, from Q1 to Q2, and also I think these are historically low margin numbers. I think margin have always been 17, 18, 20. So any particular reason you point out, and this is like a one-off, and margins will revert to 17, 18?
So, Q2 is usually a period where the activity slows down, mainly because of the summer break in Europe, and so that's the reason why it has impacted the EBITDA margins, and this will come back in Q3 and onwards.
Okay.
We are looking at an average 18.5% in aerospace. That will continue to be there. It will be my overall year on year. It will be average about 18.5 plus. It won't go down, but it will be nice. It's the same maintain.
Okay. And if I can squeeze in one last one, sir, when can we see the order for LLTR Ashwini? It looks like negotiations with Bharat Electronics is taking quite a while.
Sunil, you want to answer? LLTR?
Yeah, so LLPR, we are awaiting the negotiation with BEL actually.
Any timeline, Sunil?
We are expecting it by in a couple of months' time. By Jan, we should have the orders.
Okay. I have a lot more. Maybe I'll reach out offline. Yeah.
Sure.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you, everyone, for this great participation. We look forward to continue to interact with you. Please do reach out for any queries which you may have, either by email or connecting with us. Thank you for your continued support.
Thank you. On behalf of Axiscades Technologies India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.